Hi everyone, welcome to the session. In this session, I'll be discussing about how to account for prepayments. So first and foremost, let's look at the definition of prepayments. So what do you mean by a prepayment? So basically, prepayment means a payment made in advance or settlement of a bill or an invoice before it becomes due. So basically, if an expense is paid, payment made in advance, if the payment is made in advance, or a bill or an invoice settle before it becomes due, so that is known as a prepayment. Okay, so when a company prepays an expense, it can be accounted for the future use of that particular service by recording it as an asset on their balance sheet. This is very important. Okay. Now, as I discussed in the accruals, whether you paid or not, okay, all the expenses relating to that particular period has to be accounted for. However, in this case, since the payment belongs to a future period, so prepayment means you are paying uh, the current expenses as well as future expenses. Okay, so the future expenses is known as prepayments. Okay, so therefore we need to separate if any payment is made including the current as well as the future, we need to segregate, we need to identify the future payment, and we need to treat this as a prepayment. Okay, so because the service or the expense has not been consumed in the current period, so therefore in the current period you can't account the future expenses. So this is the meaning of prepayments. Then, as each month passes, they can deduct the used portion from the asset and charge it as expense in the relevant period. So, whatever the future payments is treated as prepayments, it is treated as an asset in the balance sheet. Okay, in the balance sheet, we treat this as an asset. Okay, so in the future period, when the particular period comes, what we need to do is we need to unwind the asset and we need to charge it to the expenses. Now let's look at this question. During the year, business paid an insurance bill of 4,500 for 15 months to December 2016. The year end of the business is 30th September 2016. What prepayment is needed at the year end 30th September 2016? Now, in these type of questions, what you need to do is you need to identify the financial period of the business. So, what is the financial period? The financial period, the year end of the business is 30th September 2016. So, which means this is the year end, 30th September 2016. Okay. So, what is the beginning of the period? Beginning of the period should be October, 1st October 2015. Okay. So, this is the 12 months period. Okay, so this is the financial period of the business, 1st October to 30th September. Okay, let's go through the question again. During the year, a business paid an insurance bill of 4,500 for the 15 months to December 2016. Now the business has paid 4,500 for 15 months till December 2016. Their financial year starting from 1st October, this is the first month, and this is the 12th, and paid up to 15 month. Okay, so which means after September you have October, November, and December. How many months? 3 more months. This is 12 months, and 3 more months the business has paid 4,500. So basically if you take 1st October till December 2015, which covers 15 months. Okay, 15 months. And the business has paid $4,500. Okay, so which means if you divide this by 15 per month, charge is how much? 300 per month. $300 per month. Okay, what is the question? What prepayment is needed at the year end 30th September? Okay, now our financial period starting from 1st October 2015 to 30th September. So this is the year end, this period. Okay, 12 months period. So whereas this period we have paid in advance for 3 months. This is a 12 months period. So therefore, the amount to be charged to the P&L as expenses should be 300 times 3, which is 3,600. Okay, and here how much? 300 times 3, which is 900. Okay, so this 4,500 consists of 3,600 for the current financial period. However, this $900 is pertaining to the future period from October to December for 3 months, which is 900. Okay, this 900 has to be accounted as prepayments. So how do you account this particular transaction? So when you make the payment, you will charge this to insurance expenses and the bank account. Okay, so 4,500 has been paid, so therefore you have to credit the bank cash out and debit the expenses 4,500. Okay, the corresponding entry is in bank account, here it is in the insurance account. Okay, now so what is the relevant expenses for the period? 3,600. Okay, so therefore what you need to do is you need to transfer this 900 paid for the future period as prepaid expenses. So you need to open up an account called prepayment insurance. Okay, so you need to transfer how much? 900 has to be credited here. You have to mention here prepaid insurance, and prepaid insurance has to be debited here, insurance expenses. Okay, so therefore what will be the P&L charge in this particular case? So what is the relevant expenses to be charged to P&L? That will be your profit and loss account should be debited with 3,600. So this is the relevant expenses for the period 3,600. So therefore, what prepayment is needed at the year end 30th September 2016, which is 900, that we transferred to the prepayment account. So this is the answer for this particular question. Now let's look at another question. In the current accounting period ended 31st October 2016, a business pays annual insurance for the year ending 30th June 2017 of 4,800. What is the prepayment at the end of the year? Okay, so first and foremost, you identify the financial year. So what is the financial year? The current accounting period ended 31st October 2016. Okay, so their financial period ends on 31st October 2016. Okay, and the financial period begins uh, on 1st November 2015. Okay, so this is the beginning, this is the end. From November 2015 to October 2016, there will be 12 months for the financial period. A business pays an annual insurance for the year ending 30th June 2017 of 4,800. Okay. However, the business has paid uh, annual insurance for the year ending 30th June 2017. Okay, so this annual insurance period ends on 30th June 2017. Okay, so this is the end. What is the beginning of this insurance policy? It should be from 1st July 2016. Okay, so it should start from 1st July 2016 and it will end on 30th June 2017. For this annual insurance, the company has paid 4,800. Okay, so which means if you divide by 12, so that will be how much? 400 per month. Okay, so 400 per month will be the insurance charges. Okay, so what is the prepayment at the end of the year? So what is the prepayment at the end of the year means at the end of the current financial year. The current financial year ends on 31st October 2016. So therefore, if you analyze this, as you can see, okay, the insurance policy, the annual insurance policy begins on 1st July 2016, which is in the current financial year. Okay, which is in the current financial year. From July 2016 to 31st October 2016, how many months? So from July to October, July, August, September, October, 4 months. Okay, so 4 months, uh, 4 months fall in this current financial period, and 8 months falls in the next financial period. Okay, which is starting from after October, it will be November. Okay, so from November 2016 to 31st October, 2017. Okay, that is the next financial period for 8 months. Okay, so therefore uh, the company, since company has paid, business pays annual insurance year ending 30th June 2017 for 4,800. So therefore, what is the prepayment at the end of the year? At the end of 31st October 2016. So since the company has paid 4,800, including the current 4 months and future 8 months, so therefore for this 8 months has been prepaid. Prepaid. So therefore that will be 400 per month times 8. So that will be 3,200. So $3,200 has been prepaid in this particular scenario. Okay, so how do you account for this? How do you account for this particular question? So you have insurance account, insurance expenses, and how much has been paid? 4,800 has been paid. So therefore you need to credit the bank. The bank account has to be credited 4,800. So this is the insurance expenses and this is the bank. However, since the company has paid 8 months insurance in advance for the future financial period, the current financial period includes only 4 months. So therefore, we need to transfer, we need to open up an account for prepaid expenses. Prepaid expenses, this is insurance. And you need to transfer 3,200, we need to credit and debit to prepaid expense account. This is insurance account and this is prepaid expense account. So therefore, how much to be charged to the current financial period? So when you balance this off, you need to charge 1,600 to the current financial period. 1,600 means 400 times 4, which is 1,600. Okay, so this is the answer for this particular question.